Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is the 16th of September. It's a Wednesday. It's a hump day. We have FOMC today. It's going to be a big day. It could start out as a muted day, but it will end up as a big day, as usually does, because funds tend to move into the market and retail investors also tend to move into the market after the Fed reports. That's happening between 2 and 2:30 today, and then the Fed is speaking. Our popular Jerome Powell, who can't hold anything back. He has to tell us everything he sees forward, which is completely opposite of how the Fed should run. But that's not here nor there. So let me get into the global news, and then I'll get into some COVID-19 news. And then I'm going to tell you the three strongest tech stocks that are pulling back right now that could be ready for a prime time entry opportunity. So world markets are trading in a narrow range, just as I told you they would. This is very typical and classic before the Fed announcement or central bank announcement. Why? Very simple. Big institutional traders don't want to make big bets before potentially market-moving Fed data comes out. Fed is expected to keep the benchmark rate near zero for some time to help the economy recover from the pandemic. Its statement might change some of the language around its existing pledge to buy bonds to support markets. Economists say they are going to be buying bonds, and it looks like they may be moving into stocks and stocks via ETFs. Japan's central bank has begun a policy meeting that'll wrap up on Thursday. They're not expected to make a major change. Japan reported that its trade balance swung in surplus in August as 15% decline in export from a year earlier was outpaced by a 21% drop in imports. Ouch. Exports have been hammered by the COVID-19 pandemic, but the rate of decline has been narrowing over the past several months as shutdowns are easing and Chinese economy began to recover from the sharp downturn. Big tech stocks have been bouncing back this week after suddenly losing altitude earlier this month amid worries that the prices climbed too high. Bank of America analysts came out with a survey, and according to big cap market traders, about $600 billion worth of market cap, and they're saying that the second biggest fear they have behind COVID-19 resurgence is that the technology sector may be overbought, and that's pretty important. I talked about that yesterday. Analysts expect more volatility for stocks in the months ahead as the market navigates uncertainty over the outcome of the election. Pessimism that Democrats and Republicans in Washington will be able to reach a deal to send more aid to unemployment workers and economy still struggling amid the pandemic. Nothing new there. And crude oil prices are still trading below $40 a barrel or $42 a barrel, which is the price U.S. frackers have to pay for oil here in the country. So they are, again, bleeding oil. Bleeding money, not bleeding oil. Well, they're bleeding oil because they've got so much of it. But no, they're bleeding cash because it costs them. They're bleeding money to buy the oil that they have to produce to sell at a profit. So it's a double whammy. It's a nightmare because the supply levels are so high. Now, I wanted to share something interesting with you. This is from the United States. This is from the U.S. Center of Disease Control and Prevention. The COVID-19 may have been lurking in the U.S. as early as December, according to new study. That's a full month earlier than believed by the U.S. Center of Disease Control and Prevention. The study found significant increase in hospital visits at the time by patients who reported respiratory illness. And now we may be living under the shadow of COVID for another year or so. The chief science officer of the World Health Organization said it could be 2022 before the world can begin thinking about returning to pre-COVID life. A quick COVID-19 vaccine check, and this is very interesting. The National Institute of Health has expressed concerns over potential side effects of AstraZeneca. Now remember, we were all curious why they stopped their trials. Somebody got sick, and I was wondering what happened to that person. Finally, they said it. Spinal cord damage. Ouch. The stock barely reacted, though, and the FDA is waiting whether to resume the trials, and from what I understand, they're going to do it. But I was curious, like, what happened to this person? Did they turn green? Did they throw up? Did they disappear? They had spinal cord damage. That's very, very serious. Imagine you're taking a vaccine for COVID-19 and you end up getting spinal cord damage. That's not fun. So, and AstraZeneca is one of the three companies that are in phase 3. We got Pfizer, Moderna, and AstraZeneca. So you got to be very, very careful. Ticker symbol AZN. Keep your eye on that stock. Now, I want to talk about 3 tech stocks that are bouncing back. And I mean, they're bouncing back really, really hard. So I want to bring them up to you right now because we may be in for another tech rally. If you guys are hearing some noise behind me, we got noisy gardeners. I don't know why they're here right now, but they love to come here when I'm recording, so bear with me. Oh boy, here we go. They're going on the bushes. Anyway, we got DocuSign. Very, very strong trend, a pullback all the way from the 290 level to the 202 level. I would wait for us to go back above the 220 level to the upside. At that point, DocuSign looks like a really good buy, especially if COVID-19 stays with us till 2022, because everybody's signing mortgage applications, agreements, contracts using DocuSign right now. The next stock on my list is PayPal. All the stay-at-home people, they have to spend money somehow. They're using PayPal. PayPal is pulling back. We filled this gap. I like how it's looking right now. I'm looking to buy. We went as high as 211. Now we're at 187. I'm buying at these levels right now. And I think PayPal is going to bounce back. It's one of my top 3 tech stocks. And the last one is NVIDIA. I love NVIDIA. Look at this. It's already pulling back. It's already bouncing back from the pullback. I think if we put a moving average here at a 50-day, yeah, we're still above the 50-day moving average. Let's look at PayPal to see if we're above the moving average there. Right below. So I would wait till we're about 197-ish level. Wait till we're moving back up, and do the same thing with DocuSign. Wait till we're above the 50-day moving average. Wait till we're above the 219, 220 level. Buy at that level. Till that point, I would wait because we are in twilight zone, which is between the 50-day and the 200-day moving average. You want to wait till we're clearly above the 50-day moving average for 2 days. So you got DocuSign, you've got NVIDIA price levels. Wait for it to be, it's already above the 50-day moving average, so that's good. And we've got DocuSign. And again, you want to wait till it's above here, about the 220, 221 level for a few days. PayPal, you want to wait till we're just above, like around the 196 level, and so on and so on. Just wait till we're above the 50-day moving average. But I really like these 3 tech stocks, and I like them because they have a lot of stay-at-home qualities. NVIDIA does graphic processors and cloud. They're getting big on the cloud. PayPal, whenever you pay for something, people are buying right now. They're spending money. Consumer discretionary and retail is hot, but they're doing it online, and guess what? They're paying through PayPal. So PayPal is moving up, and DocuSign. Anything you want to sign right now, people are doing it online. I know that Adam Sarhan, he just signed a mortgage for one of his third houses or whatever. He's got a bunch of houses. He did it with DocuSign. He was just telling us live on the webinar. So again, people, I'm signing my contracts with DocuSign. I haven't gone anywhere and personally signed a contract in a while. So DocuSign, PayPal, and NVIDIA are great tech stocks that can potentially help us with the stay-at-home economy. And as you heard it from the U.S. Central Disease of Control and Prevention, 2022 before things get back on track. Now, folks, COVID-19, it's going to do its own thing. Tech stocks, they're going to do their own thing. But looking at yesterday's data, it's going to bankrupt you. You might as well look at the stock market when you go to bed and wake up to a completely different story. Markets are moving fast, way too fast. Yesterday might as well be a year ago. If you're looking at yesterday's data, you're driving the car and looking at your rear view mirror. That's right. You're driving your car forward and looking at your rear view mirror. It won't make any sense. You'll crash. And that's why I've teamed up with the world's #1 pre-market trader, Tom Busby, to show you how we've been able to crack an all-new style of trading. You still trade during trading hours, but you do your analysis before the trading hours. Look at what I just did. I just did my full analysis like I do every day before the market opens, so that when the market opens, I already know what my price levels are. I already know what stocks to buy. I already know what to sell. I know exactly where we stand. This breakthrough, this all-new trading style, it allows us to spot potential winning trades before most people even wake up. It's only 5:23 Pacific time right now, and we're already going through our market, and it's going to open in about an hour and 7 minutes. So this will allow you to spot potential winning trades before most traders have even gotten up or had their coffee, which in today's market can make the difference between winning big and losing your shirt. I don't want that to happen to you. If you want to see these trades in action, click on the link below to watch the presentation. Folks, you do not want to miss out. You get everything ready to go before the opening bell, and then when the markets are open, you're just executing. You're executing. So you're not trading before the opening bell. You're analyzing before the opening bell. And that's why Tom Busby, good friend of mine, #1 pre-market trader. You cannot afford to miss this in the current economy. Why? Global economy is working as one. Everything that's happening in Europe is moving into US in the morning. You've got to know what's happening around the clock. And Tom Busby is the guy for it. This guy's been at it for over 40 years. You cannot afford to miss this. Follow the link below. Get in on this now. And most importantly, have a great day. Hey, folks, if you're enjoying this, put some feedback. Send me a love letter, support@marketgeeks.com. If you don't like the color of my polo shirts, that's fine too. Let me know. Give me some feedback. Talk soon. Have a great day. Bye, everyone.